In this video, I'm going to talk about something lenders call a recast option. It's sometimes called a reamortization. It is one of my favorite lending tools. It's incredibly versatile. If the availability of your money to buy a home and the ideal timing of your home purchase aren't quite lining up, this could be the answer. It's simple, it's versatile, it's a really cool solution to what can otherwise be a complex financial puzzle. So what is this recast reamortization option all about? Well, most mortgages are amortized one time at closing. Your monthly payment for the principal and interest part of your payment is calculated at a level amount that's going to be the same for the whole term of the loan based on the interest rate, the length of the loan, and the amount that you originally borrowed. If you pay anything extra beyond that minimum monthly payment through the course of the loan, even if the extra amount is a really huge chunk of money, your payment doesn't change. Extra payments are applied to principal, which shortens your loan term and can save you an enormous amount of interest, but your minimum monthly payment remains the same. Now, a recast option will turn this on its head. You pay a lump sum, it gets applied to principal, but instead of shortening your loan term, your lender keeps the loan term the same and refigures your monthly payment based on the new reduced loan amount. Another way to think about this, or logic through it, I guess, is that there are three elements that determine what your payment's going to be: the amount you borrow, the interest rate, and the length of your loan. And so if you change one of those elements while holding another one constant, the other one has to give, the third one changes. So under traditional loan terms, if you pay your loan down without a recast, you reduce the loan balance, you keep the monthly payment the same, and the loan term is shortened. But when you recast, you reduce the loan amount, you hold the term steady, the finish line remains the same, you're gonna pay the loan off at the same date originally arranged, and it's the payment that adjusts. This simple concept can be a solution anytime your access to money doesn't line up with your timing for a home purchase. Let's say you have a house to sell, you find a new home you want to buy, but the seller isn't willing to accept an offer with a contingency for selling your home. Sellers often aren't. So as long as you can scrape together a small down payment, you can get creative to do this. I'd be happy to help you brainstorm for your own situation. Go ahead and buy your new home and then recast to reset the monthly payment when you get the proceeds from the sale of your old home. That's a really common scenario, but there are lots of other times a recast can come into play as well. I think of it as almost like a Swiss Army knife loan feature. Maybe you're expecting a bonus or a gift from family or an inheritance or some other influx of cash, but you don't want to wait for it to buy your home. You can buy now and then adjust your monthly payment later with the recast option. Or if you have your eye on a fixer-upper and you're not sure how much all the fixing up is going to cost, you could make a smaller down payment for starters and kind of reserve a cushion of funds for all the remodeling. And once the literal and figurative dust settles on the work, you can recast your loan with any leftover cash. Or maybe you have more than one property you plan to sell as you buy something new. I see this actually pretty often when couples come into a relationship both owning a home and they want to sell the mine and yours and buy an ours home. Dovetailing a single home sale with a new purchase can be challenging enough, but if you're trying to coordinate multiple home sales and find a seller that's willing to accept multiple contingencies, it can be darn near impossible. And so with a recast, you can sell one property, buy a new property, and then recast when you get the equity from subsequent property sales. And if you want to experiment with keeping your current home as a rental, a recast can be a really nice fallback position. If you want to buy a new home, and this is especially relevant if you have an incredibly low interest rate locked in and you're like, gosh, I got to buy a new place, but I just don't want to let go of that. You can experiment with being a landlord. If it turns out it's not your cup of tea, you can always sell later and recast to reduce your monthly payment. And if you're paying ahead on your loan, as you're approaching retirement, kind of trying really hard to get your monthly payment or get your mortgage paid off as you get close to the finish line for working, a recast can be a really cool option to keep in your back pocket. If you're paying ahead, but you can't quite manage to get your house 100% paid off by the time you're retiring, you could recast to a smaller monthly payment based on whatever little remaining balance is in place when you're ready to call it quits. Access to a recast option depends on two things: the loan program and your loan servicer. Government-insured programs or guaranteed programs like FHA, VA, and USDA never have a recast option. But conforming loans, conforming fixed-rate loans usually do. These are loans that are owned by Fannie Mae or Freddie Mac. They're all eligible for a recast so long as your loan servicer is willing to do the paperwork. Not all servicers are, and every servicer that is going to have its own rules. Most will require that you pay a minimum amount toward the loan. I really commonly see this at $5,000, $10,000, or maybe a percent of the initial loan balance, like 10% of the initial loan balance is pretty common. And you definitely want to expect to pay a processing fee to cover the paperwork costs. $300 to $500 is pretty typical. If you already have a mortgage and you want to recast, just call your loan servicer and ask about their policies and what the costs are going to be. If you're looking for a new mortgage, call me. I'd be thrilled to talk and help you find the best loan option to fit your plans.